here we go for Bitcoin. Starting off with the chart of the day, and then we'll swing back on over here into the crown trade application, of which I should let you know that there's a sale going on right now, but we'll get into the weeds of that soon enough. The big things that I'm waiting for today, the closure of today, that is, which I believe is 8 p.m. Eastern time due to daylight savings, is this, the 5-day chart, something that we've been speaking about for about a week consistently now. And we don't just have the 5-day closing night, we have the daily and the 2-day as well, as I wipe off the coffee from my face because, I missed my mouth, it looks like. Anyways, there is a very specific signal, very specific indicator that I'm looking for to clarify my bias and what I'm essentially leaning towards for price action today upon closure, that is. And that's going to start with the 5-day signal over here. The 5-day signal on stochastic momentum is going to essentially give myself a bit of a bias on the direction of price action. That is due, most importantly, if we go in order of importance over here, on the 5-day. And yes, we'll follow up on short-term time frame analysis soon enough. Basically, the same things happen, and we hit, the short-term range highs, which done the same things before. But ultimately, the 5-day is the big thing that I'm focusing on right here. So I want to start off with the most important signal first, which we already obviously have. That is going to be the 5-day BBWP representing volatility. What I've done on this chart, on this chart right here, is I've marked off with these green vertical bars all of the areas where we've seen this low volatility in the past year now, going back to May 2021. And there's been a very specific result with all of these very low volatility regions. Now, of course, I should discuss that volatility is direction neutral. So this can come both to the upside and the downside, but it does essentially speak towards the violence and the severity of the move, of which if we measure out these moves from that low volatility read to the next expansion precipice, I guess, would be, very similar to each other as we'll kind of back test right here. So in this first iteration, we do see that first move bring Bitcoin down about 47.5%. Keep that number in mind. Now, this one obviously coming with a downside result, and we'll come to that in a second, in a few seconds later. But then I want to be looking at the next one right here, from signal given to next major high before that next pullback was about 44% to the upside. Not bad, obviously. And then we get another fresh signal after another contraction phase right here in September off of the $40,000 low, and that brings Bitcoin up to its current all-time high at $69,000, just around 43 to 44% gainer to the upside. So very consistent with the last 3 iterations in this case, of which we had one more iteration within this past year, and this would be the downside signal that we saw in early December, which brought Bitcoin from about $56,000 to our current low of about 33 on a wick basis, 41.35%. So you can see that all of these iterations have produced very similar moves in Bitcoin over the past year now, and we are once again at the same levels, a little bit lower actually than the last 1, 2, 3 signals, very consistent now, more in line with what we saw in the May signal, which was obviously the biggest of those. And so I do want to just blindly now plot off what would it look like if we added 50% or 45% to the upside or subtracted 45% to the downside. Then we're going to come at that from the 5-day stochastic momentum oscillator and see what sort of a bias we could have on that, and then align it with technical targets from there. And so in this case right here, obviously, if we added about 45% to price action from our current lows, that would put Bitcoin right around about $55,000 to $56,000. Keep that number in mind. We're going to come back to that a little bit later, as we will to the downside as well, because I do think that it's still, very much relevant here. And of course, in this case, if we were to shave off about 45% to the downside, that would put Bitcoin around $21,000 to $22,000. So keep those numbers in mind. And what I do now is I'd actually measure up the volatility reads, again, these 4 signals right here, and working on number 5, or we are at number 5 right now, and then mediate that with a momentum oscillator for bias on direction. So that's why I'm putting so much weight on this indicator over here, the stochastic momentum oscillator, of which I have gone ahead and marked off the exact same green vertical bars correlated with those pivots on price action. And what we can do now is measure them up, of course, on the stochastic momentum oscillator. And what I'm looking for here are 2 things: the direction of the stochastic momentum oscillator, plus what sort of a zone is it in. Is it in the bullish control zone or the bearish control zone, or is it, rejecting one of those regions? In this case, we see on the first iteration in early May, when Bitcoin had that downside move, we saw 5-day stochastic momentum was heading to the downside, and also getting out of the bullish control zone for the first time since October 2020. So that was, quite significant right there. Obviously, that one did have, basically almost a 50% move to the downside from that signal given to next major low. So I would say that is, rather well documented. Then we can move on to the next one, which of course was coming off of the July bear trap from about $30,000 to $53,000. And in this case, what do you know? We have the exact opposite right here. 5-day stochastic momentum was pointed to the upside and just working its way out of the bearish control zone. So two very important factors. Then we get another upside resolution, remember, off of that $40,000 higher low in September of last year to our current all-time high on Bitcoin. And what happened right there? Well, we did see, most importantly, a fresh turn to the upside on 5-day momentum and rejecting getting out of the bullish control zone. So essentially momentum was still in the bullish control zone. Very, very important right there. And then of course, what happens after that in December? Well, it loses the bullish control zone and turns down at the same time. And that was, leading up into our current move that we've seen thus far. And of course, with today's closure looming overhead, again, 8 p.m. Eastern Time, I do believe it is, which is in essentially 17 hours, 34 minutes, and 47 seconds from this moment, or I guess a little bit less than that now. But ultimately, what do we see right here? We see that we are right at the precipice of a major bias in direction, at least in the way that I look at things. The 5-day stochastic momentum will turn officially to the upside and get out of the bearish control zone for the first time since that early December move, actually, if Bitcoin does close today above 38,331. So, or 38, let's just call it 38,400 and give it a little bit of a buffer zone right there. So again, not only would it be, once again, pointed to the upside, but it would also be working its way out of the bearish control zone, a very similar signal to what we saw over here in late July. And to take that one step further, what we can do is, and of course, the opposite, does apply as well, right? If Bitcoin does close below about 38,300, we're very likely going to see another move towards the lows, maybe even new lows on top of that, of which I do think that could, be the initial sort of etching of that ultimate move towards, much lower prices into the $20,000 territory. But for right now, I also want to focus on this as well. Look at the bottom green horizontal line right here at the 8.62 region. You can see that the 5-day stochastic hit that level basically on our current lows in the lower $30,000 territory. And why I'm marking this off is because Bitcoin has really only hit this region a few times in its past. The last time that Bitcoin actually hit this region on 5-day stochastic momentum was back on over here in December 2018. December 2018 was right here on the $3,100 low after Bitcoin played out, well, basically its full-on bear market meltdown. Now, of course, it did take a couple months from that point for Bitcoin to get ready for some more upside, but ultimately that was the low. Yes, it did get quite close to it in March of 2020 off of the Rona dump, but as you can see, it did not trade any lower than that ever again. And if we do go back even further in the annals of history, we do see that it's actually been hit a couple more times in, well, 2014 and 2015. These two iterations right here, one of them was a macro cycle low, that of course being in 2015. The other one was October 2014, which was a massive bull trap. But even within the context of that bull trap, did produce a nice move to the upside of about, on a closing basis, about 25% almost. And of course, the only other time that we've seen it this low as well was coming in back on over here, October 2011, of which that was another macro cycle low. Does come very close to retesting that region a month later in November, but ultimately that was the low. And well, again, took a long time for Bitcoin to get going from there, but ultimately that was up and to the right after that. So in this case right here, I do think that there's a lot of points of confluence, obviously, but until those sort of confirmations happen, I do think that, it's still obviously very, very risky. And even with those confirmations, what's going to matter most at the end of the day is price action, of course. So we'll get into that soon enough as to what would actually validate a major upside or downside move in this case. But before that, I do want to also go over the 2-day stochastic momentum, which is also closing tonight and also pivoted at the exact same goddamn number as the 5-day, or basically 38,300 in this case, and the daily as well, which is also pivoted at 38,500 or just above there. So basically all the daily, 2-day, and 5-day are pivoted around about the same numbers. If we do start to see Bitcoin, especially close above $39,000, I'd say that'd be a good indication that the upside becomes more likely than the downside out of this current base, or at least another try to the upside. But what is the most important thing within this overall formation? The thing that supersedes everything else, the one thing to rule them all, the one thing to bind them is this: price action. Obviously, this is one that matters most. As long as Bitcoin's below $44,500, there is no upside resolution. It is only lower highs, and lower highs typically beget lower lows in many cases. And by the same token, to the downside, as long as Bitcoin's riding on these higher lows right here, basically above about $37,000, I do look at that as, it's not necessarily a full-on breakdown just yet. Here's the thing though, if you do want to go over the last couple months here, and especially yesterday's failed, or I guess like the last failed rally that we did see. I guess this was like 4 a.m. for me, so about an hour before I woke up. Ultimately, this is not like bullish right there. It's a slew of lower highs, obviously, and it's by no mistake that Bitcoin did get rejected on yet again another lower high, even below that 42,500-ish region right here. So ultimately, I do want to represent both sides in the proper way, but until we do have a resolution above the top side of this region right here or below the $37,000 region right here, you can look at indicators to give us a bias on price action and direction, but at the end of the day, price action matters most. Obviously, those just give a bias and a higher probability of of that result happening. So, in the case of of an upside resolution, I should also document the other confluences that we do have with that 45-ish% move all the way up to what would have been about $56,000. Well, that would confirm this again with any sort of a daily closure above $44,500. As an ascending triangle off the lows, which is a bullish reaccumulation formation, which does have a natural implied target, in this case, basically around $56,000, which is also having great confluence with the 3.272 Fibonacci extension right here. So these are, good things to be happening together. And then, of course, that would, along the way, naturally confirm a weekly higher low, of which we would have low, higher low, and a bit of a secondary higher low right there as well. And that would have naturally confirmed a couple drives of hidden bullish divergence come off the low here as well, which would have a natural target into the $52,000 region, and then actually a secondary target towards about 57, which would be very much in alignment with what we did see off of the prior sort of expansion phases from those similar signals. Now, of course, I should document the downside as well. And to be fair, as long as Bitcoin's put in lower highs, the downside is, not just like a possibility. It's actually quite likely. So again, how would I confirm this? Well, I'd confirm this with a daily closure below about $37,000 as a resolution of this formation to the downside. Very likely Bitcoin does make its way down towards about $34,500 to $35,000 before the next sort of short-term bounce. But I do suspect it would just be that, a short-term bounce, whilst getting ready for a more long-term move to the macro range support area, which is about 29.5 to 30,500 right here. And of course, probably another bounce there, but ultimately off of that expansion of the 5-day volatility, I would be expecting more over time. And in this case, we do have a target. We do have a natural target based off of this chart, which would be around the green 55 exponential moving average based off of the monthly MACD crossing the downside. It's happened 3 times in the past. Each and every time has led towards an ultimate move towards that region, actually. And timing that move has become more relevant with an actual closure below the white 20 simple along the way, of which we don't have that just yet. That would happen with a monthly closure below about basically 38,500, but I'd give it a bit more of a buffer there, seeing as it is monthly. And yes, at that point, where's the 55? It's actually at around 23,700 at current moment in time. So, getting a wick down to about $21,000 to $22,000, very much relevant. Probably a closure somewhere around 24-ish, let's say. But ultimately, that would make that more viable. So, until we get those sort of resolutions, you can see the big trade very much in front of you. Or at least, I imagine that you can, as I'm kind of going over it right here. But today, I imagine it's going to be the first sort of etchings of that move, based off of not just all the indicators that we've looked at, which have natural confluences on today, but also, today is an event, right? We do have the Fed meeting, and Jerome Powell is going to speak, which is up until November of last year, every time that he ever spoke always resulted in upside. Hasn't been the same since then. So I don't know. I obviously have no insider information as to what they're going to say there, nor do I suspect that most people do. But at the end of the day, the best way to kind of be handling these situations is not actually front running signals like this, or at least in my opinion, what's the best way is to be marking off the critical regions, the critical areas that would give us an indication and a high probability bet on that direction if that condition is met. So I think you can kind of figure out what I'm thinking about in these sort of particular situations right here. We can briefly go through the lower term timeframes as well. Obviously, basically Bitcoin played out a move up to the 618 Fibonacci retracement right here. It's the same shit as what we've been seeing before, right? But it is, to be fair, another rejection on a lower high. And if you are following me in the fractal from late 2018, this is actually what you would have expected right there. But still, I don't really see anything that's like super conclusive for the lower term timeframes. We can briefly go over lower term timeframe stochastic momentum. I don't know how much it's going to matter right here, but oh, by the way, the 12 hours also pivoted around that 38 400-ish region. Very interesting. 6 hour, what do we see right here? We do see it actually freshly crossing down below $40,000. Okay, so a little bit more on the downside angle. 4 hour will cross the downside officially below 39,600, but well, yeah, fair enough. Although we did get the first DMI flip for the first one in about half a week to a week, which is kind of significant on a lower term time frame like that. 3 hour, what are we going to see right here? We're going to see a loading screen and pivoted downside below about 40,600. So not looking too hot for the short term right there, as is the bi-hourly 41,250, and hourly is going to be pivoted at 40,700. So lower term timeframes, even just holding sideways above about 38,500 is actually going to be rather significant for the for the short term leading into the daily, 2-day, and 5-day closure. I'd even consider that a small win for the BULAs right there, but ultimately, again, it's the same thing in the lower term timeframes right here. Until we actually get a resolution out of this range, it's been literally the same trade for weeks now, and it's been requiring a lot of patience. But hey, for the people who do have patience, well, I mean, it's been there. It hasn't been very sexy or seductive as far as trading goes, but that's not how I want my trading to be anyways. I want it to be boring as fuck, and predictable, or as much or as predictable as possible. Anyways, get back on over here and let's check out the underlying market dynamics on the Crown Trading application. Of course, you can find that in the link in the description below, of which I believe we actually have a premium for the week, or at least for the sale, probably free. So you can check this out yourself. But in this case, I do want to put a significant interest on the global open interest yet again. Now, keep in mind, the daily feed obviously only updates, well, once a day, as you would expect. It's at 11.05 billion. Here's the thing, though. When we go into the hourly feed, you can see that has come back down to the exact same levels that we've been essentially basing off of, a little bit lower than that, to be fair, for the past couple weeks here. And that would be in the low 10 billion region. So these positions have already been shaved off, and we're kind of back around what I would consider parity, a little bit above it, but very, very close to it. And again, I want to be very much notified when we do see a change of behavior here from the open interest perspective, again, representing leverage positions, which has had a very good correlation with what to expect in the market. What's going on right there? Elsa's having an issue. Anyways, I want to know if and when the open interest goes below 10 billion. Obviously, if it goes below 9 billion, that's going to be like a much different picture. And then above about 13 billion. Those are kind of the two areas that I'd be keeping an eye on right now. Below about 10 billion is kind of where I look for, likely another short-term bounce. High probability. Until then, we're kind of back around parity. And then on top of that, we do see that funny rates are, pretty much 0%. This would be a little bit more on the bear side as well, to be fair, but these are very, 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 very small numbers right here. Just like over the past weeks when we did see very small but negative numbers, it's like, yeah, maybe a short-term bounce based off this, but it's not really anything super concerning or super, compelling for price action. I'd say the same thing over here. Essentially, if you look at the daily feed, you actually very quickly notice that over the past about 4 months now, you can see that it's actually been slowly but surely kind of wedging itself more and closer towards zero. So I look at this as actually another indication that we are seeing, a major consolidation phase. And well, we're probably looking at resolution on that. I think end of this month is quite likely. And we're probably going to see the initial etchings of that today upon daily closure. So with that said, should I get into the sale as well? I think we can just briefly go over it right here. I always want to say with the sale, make sure that you watch the videos that accompany any one of these programs to make sure that you understand, who they're for and who they're not for. Basically, is it relevant to you or not? Most people it's not going to be relevant towards, because you don't need like fucking 40 hours of videos on technical analysis if you're not planning on taking it a few steps further. Most people probably are going to be fine with the videos here on YouTube, which is 100% free, and I'd strongly suggest that you take advantage of those first before ever considering getting into a program, so that you can kind of get an idea of whether this is for you or not. Other than that, understand that these, especially the programs, take a lot of time investment as well as a financial investment. So if you don't have the time to actually make the most out of them, then it's irrelevant in my opinion. Honestly, it's irrelevant. Obviously I would appreciate, it'd be great on my end, but at the same time, I do want to make sure that people who are actually getting these things, they actually get some out of it, and it's naturally going to take some time. And for the people who really do, for the TA program, for example, actually become like a full-time trader, we've noticed that it takes about a year to a year and a half for the people who really put the effort in for that. But yeah, other than that, usually if you're on the fence about it, a good rule of thumb is it's probably not a good fit. So I think I'll leave that right there, and we'll get into the questions, and that would be it. Nice. Hopefully that was helpful. And there you go for Bitcoin. Get ready for a nice day ahead.